The Federal Reserve is set to make its call on interest rates on Wednesday, on the eve of the Reserve Bank also making its decision on the same. The general feeling is that the Fed will keep rates unchanged.
The data that we've seen is still slightly positive as far as growth is concerned. So last week you would have seen retail sales in the US, rising around about 1% or so month on month. And with non-farm payrolls not being excessively weak. And so in line with Chair Powell's, approach of being data-driven, I think they are comfortable with the level that rates are at the moment, which are fairly elevated. So we do have restrictive policy. However, I don't think we're going to see much of a decline in the rate cycle as previously expected by the market earlier in the year.
But in places like the UK, inflation has been stickier in coming down, with market expectations that the Bank of England will raise rates further.
I would venture to say that they will hike another 25 basis points. And reason being, we saw the last hike from, the ECB last week, and them, declaring that we're going to anchor rates at this level going forward. I would expect the BOE to follow suit. And similarly, I suppose, or even perhaps to a greater extent, inflation in the UK is still somewhat more elevated relative to the US and the EU.
If the US Fed does raise rates on Wednesday, that might make the job of the Reserve Bank slightly more difficult come Thursday, when it makes its call on rates. It may be tempted to also raise rates to ensure that South Africa remains an attractive destination for foreign capital looking to invest in the country's markets. Nompumelelo Siziba, SABC News, Johannesburg.